This conference will now be recorded.
Good evening, ladies and gentlemen, and welcome to this Danielcode tutorial. This is being dictated on the evening of Wednesday, 9th of April. This is not our usual live presentation. We'll let you have more information about that as we go, but um, we're going to talk about the day before Easter and the things that have happened since then. And boy, oh boy, we are living in a very dynamic climate. Markets, of course, are our great interest. The day before Easter is just a salutary lesson about what are the unforeseen actions behind markets. And we'll get there as we go along, but there's so much to talk about. Let us get on with it. A warning, as you can see, Terry's created this wonderful banner for us with a bit of AI. And of course, it's managed to garble the introduction to it. So don't put all your faith in AI, folks. I've been telling you for a long time. Um, there's no such thing as AI. It's marketing fizz for a very, very, very clever product. That's really Google on steroids with these amazing advanced chips that are being improved every day. It's quite extraordinary. And here we are. Okay, so time is moving on, and this is actually a slide from the previous webinar, which we had trouble recording, and I was going to re-record it for you, but time got away, and there's so much happening that whole parts of it became quite irrelevant. But interesting how things that were top of mind a fortnight ago are still top of mind. In that particular webinar, I started off by showing you this slide, which was called Panic, about the Straits of Hormuz and oil, about the ongoing diminution of software in the software AI battle, private credit, the problem growing all the time. And you remember I told you about Blue Owl and one of the earliest episodes leading to gating of investors' funds. In other words, they can't get their money out, or only very small parts of it. And that, believe it or not, was 6 weeks ago. It's all been rather overshadowed by the war in Iran, the volatility, the quite extraordinary and amazing moves in precious metals, of course, oil, and now equities to add to the foray. They're the things we're still worrying about today. Mag 7 has been very subdued. It's kicked back the last couple of days, but it's had down generally 15 to 20%. And that's been the driver, the power of the NASDAQ and driving all the equity indices. Can the market maintain the current levels of euphoria and optimism without Mag 7 powering along? We'll see. Back then, 6 weeks ago, the question was Trump versus Israel, in fact. That's a bit of a misnomer because, as we've subsequently learned, it is, of course, Trump and Israel joining together in their attack on Iran. And, of course, the US midterms were starting to get a bit of a buzz about them with some early selections going on for the candidates. Guess what? Here we are, 2 weeks later, nothing much has changed. panic now largely relates around the war on Iran, which is the US and Israel mounting this quite extraordinary, brilliant air war and hoping to achieve things simply through the air war. Of course, boots on the ground is a verboten subject in America, with so many foreign entanglements that have resulted in a great number of American troops being wounded and, of course, killed. So this whole attack on Iran was not fully explained to the US populace. The vast majority really have no great interest in it, but it's a vital issue to very much the rest of the world. And Trump's approval rating right now is pretty poor and getting worse. The midterm elections, as I say, are now getting closer every day, of course, and the minds of politicians who'd like to keep their jobs is turning to that in a major way. Now, of course, in Congress, the Republicans, Trump's Republicans, have the smallest majority that you can conceive of, depending on the health of individual members. Sometimes it's a majority in the lower house, the House of Representatives. That Republican majority is only 2 or 3 individuals. And America does not have the sort of Westminster principles of cabinet solidarity that you have in the UK, Australia, and Canada and New Zealand as examples. So Trump has managed to run his whole 14, 15 months of this term with almost zero reference to Congress or any involvement of Congress. He has managed to so far dominate the Republican Party that his directives and various announcements that he makes are replacing congressional authority and congressional oversight, which is, of course, a vital part of the American community, its system, its constitution, which is, of course, the bedrock of America's democracy. So there's a very high probability of a disastrous swing against Trump coming down the track at the midterms. And as I say, their present majority in Congress is so small, it's not going to take very much to tip it over. And then we'll see some ongoing battles of Trump trying to maintain his momentum and rule by dictate, rule by fiat, and a democratic controlled Congress is not going to be the supine body that the Republicans have been. So one of the big underlying issues of all this, of the war, of Trump's other initiatives, is the extraordinary cost to the US. You probably, if those of you who follow what's going on in Iran, is basically you've got the allies, US and Israel, using very sophisticated rockets, missiles, to defend against the missiles coming in from Iran. And the American interceptor rockets, the various tools that they have to protect against attacks by missile, drones, etc., have a massive cost. The main guided missile, if you like, made by Raytheon, I believe, has a cost of about $2 million each. And they're in short supply. And there's only about 60 of them manufactured a year by the one supplier who has all the patents on it and invented it. And they're using, in so many cases, this tool to defend against drones that cost $20,000 or $30,000. And this imbalance in cost is real. And it's going on the bill every day. And I just want to mention that later on to you a little bit more detail to get you thinking about that issue, because it's a sleeper issue at the moment, because everything is with the war on Iran dominating the news cycle everywhere. The diminution of stores of weapons for the US after supporting Ukraine and now this highly intensive Iran war is an extraordinary issue, and I believe it's a real concern. And the intensity of the air war is such that they're just hard keeping up the supply of ammunition, advanced rockets, etc., etc. And that's an issue that the higher ups in the Department of War, as it's now referred to, are thinking about, and I believe it's becoming a very real issue. The private credit issue, as I say, I first alerted you to it 6 weeks ago or so. The gating is accelerating now. Gating is what they call it when you have requests for redemptions which are beyond the required constitution of the fund in case. These private credit has been very stable over the years. Part of that's the way it was designed. Another part of it is because it's not transparent. There's not an operative day-to-day market that can create the valuations. And they have redemptions. Most of the funds offering private credit, handling those loans, will, by their constitution, are required to offer redemptions of 5, 6, or 7% various times during the year. And there's not been any demand for redemption, very, very small, and never been an issue. All of a sudden, as I say, I talked to you about Blue Whale way back 6 weeks ago. Since then, redemptions are now running as high as 42%, and they're only required by the Constitution to redeem 5%, in some cases as much as 7%, in other cases where they have the legal obligation to redeem up to 5%. They're voluntarily extending a little bit to 7%. And that's all stopped now because the demands have got very, very substantial. They're a death knell for many of these funds. And those withdrawal requests, they're just being refused. You know, you can request your funds, and to you they'll be all of your funds. To the fund, they're a total of 42%, as I said, up to 42%, getting worse all the time, and not in the spotlight, not even a talking point with all the other events going on in the world. But it's there, it's growing all the time. So this is a screen from the previous webinar, which you didn't get to see. But this is just, I'm sure all of you are aware of where the Straits of Hormuz are in the Persian Gulf. I'm sure all of you are aware of Iran's position dominating the north coast of the Strait of Hormuz, and in particular the choke point, which you can see where the land mass of the UAE and Iran just pinched together, and that's the choke point. And that's very easy to control. It's only about 22 miles wide. And once you control that, you control all of the traffic going north of that, entering into the Persian Gulf and trying to um, exfil from it. And that's exactly what has happened at this stage of the proceedings with Iran. And if it wasn't so tragic, there are moments of high comedy in the behavior of some of the folks involved. And I'll show you a little bit of that as we go on. But what you need to know is that 20% of the world's oil goes through the Straits of Hormuz. And at the moment, they're all bottled up in there, and Iran is holding the world to ransom. The line right across Saudi Arabia, that's an east-west crude oil pipeline that's been a bit of a lifeline for the Saudis while the straits have been closed is probably not the word, but that's what the effect of it is. And today, they were gradually getting that pipeline full and working, and sending about 5 million barrels of oil a day through that pipeline into the port on the Red Sea, and that's been a huge sort of releasing pressure valve for Saudi Arabia at least. And today, one of the Iranian drones has hit a pumping station on that pipeline. It's still pumping, but at reduced capacity, and a heavier hit will destroy the whole thing. It's very vulnerable, as you can see from the relative locations on this map. So America is worrying about the price of petrol. In Australia, we've got a much worse situation. Of course, petrol is now roaring up the chart in price, but for us, the real issue is that we've got no ongoing supply. For a so-called lucky country, we've now become the stupid country after a decade of green promotion of wind farms, all of which, as far as I know, are made by the Chinese. Solar arrays, all sorts of high-minded people are pushing the green agenda. And it goes further than that. It's actually involved the active working against the normal prior explorations for oil and gas. And Australia is a country with quite incredible resources, and its oil resources are not world-class, but they're substantial. But over the last 25 years, the government has been the government of various states, I should act, and indeed both colours of the federal government. It's the National Liberal Party on one hand and the Labor Party on the other, particularly this dreadful influence of the Labor Party, which has got us to this stage in Australia, that we just have not had any investment in our two oil processing plants for 20 years. Their output's got smaller and smaller, almost no exploration, and the government just making it too hard. And this is a comment that appeared in the Australian newspaper a couple of weeks ago. Of course, the first people to feel the pinch on the lack of fuel, which comes in entirely by ship, and it's an incredible thought. But the oil that Australia does presume from our two refineries doesn't meet the rules set by government for the quality of the oil that they can retail in this country. So our Australian oil, such as it is, gets on a tanker, goes up to the Northern Hemisphere, Singapore and elsewhere, gets blended with some external oil, and is then imported back again. It's a farce. And capital cities, like Sydney and Melbourne, they require a tanker every 2 days to keep their fuel supply going. And we're at the end of this huge, long supply line, which part of which is indirectly affected by what's happening in the Straits of Hormuz, because that's affecting such a huge amount, as I say, 25% of the usual tanker traffic, that it's having all sorts of push-on effects to everyone else. So the first people to suffer from the lack of fossil fuels, petrol, diesel in particular, are the farmers. And they have massive distances to travel, moving of livestock, moving of grains of all sorts, cotton, all the other produce. And that's done by trucks, largely diesel trucks. And there's a real shortage of diesel in the country right now. And the main oil companies in Australia, there are two, have been optimizing their limited fuel for their big clients, normal commercial practice, and those big clients are all in the city. So the farmers are in real trouble, and this cartoon shows you two of our rather unlovely personalities in Australia. The most unattractive gentleman with the windmill on his head, wind farm on his head, that's the Minister for Energy, and he's saying, he's talking to his boss, which of course is Albanese, the Australian Prime Minister. He's usually depicted as a very small man with a very big hat and a lettuce leaf. That's about how effective he is when there's problems. He is in the comic strips at least reputed to hit the problem with a lettuce leaf. And here he is saying, boss, I've been working flat out to understand the fuel crisis and its impact on farmers. And says the Prime Minister, yes, he says, Bowen, his name is, they don't vote for us. And the cynical as that looks, it's true. The Labour Party has no affiliation other than its own institutions, which are the trade unions. The Labour Party in Australia is equivalent perhaps to the Democrats in the United States, are a creature of the trade unions, socialist, some personally appalling representatives. So that's what we're stuck with. We've gone from being the lucky country to being the stupid country in a decade or more. I think it was 2012 that United Nations got 47 countries to sign a declaration that's part of their climate initiative, that each country would keep a minimum of 90 days of liquid fossil fuels in storage. Australia signed the declaration. Australia is full of good intent, and then did absolutely nothing. So we just don't have the storage. We rely on this long line, this shuttle line, of tankers without ever thinking a thought that perhaps that supply could be threatened one day, as it is now. Yeah. So here we are. The US worries about the price of petrol, what you call gas. Australia worries about not having any. And some of the pumps are empty, folks. That's the reality. Prices have gone up, supply is limited, and it's not going to take much for glitch one or two tankers having some troubles, and we'll be in big trouble. Ridiculous, isn't it? 2026. These are first world problems, and we're living with them. And this wonderful country of Australia that is unfortunately being ruined by socialist left-wing politicians. Worse than that, we've introduced, I'm not going to say cultural because they're really religious problems by starting with the country that was predominantly Anglo-Saxon Protestant and infusing massive, and I mean massive, numbers of migrants with totally different backgrounds. I don't want to get into that issue, you'll all be aware of it, but Australia has handled it particularly badly. And the Bondi massacre recently, those of you who are aware of it, that's what it all stems from, religious hatred and intolerance, which of course is the background to what the Iran war is all about. You've got there you wonder why Iran is attacking its neighbors, who are also Muslim countries. And it's the battle between the Shiites, and the Sunnis, which has been going on for generations. And it's appalling. But anyway, that's a topic for other people. Our concern is markets, and they're very interesting. And this is a chart that I actually prepared for the webinar that I was going to give you a fortnight ago, ahead of the day before Easter. And what it was, which you can see here, this is the Thursday before Easter. This is the S&P. Seriously big volume day with a lower low and a lower high that closed above its open. And to see the really short-term chart, the day trading chart, this market was just bouncing off the bottom. It opened pretty much where it closed the previous day, dived down like it was going to the bottom of the ocean, hit that Danielcode support at 6503.50, and the low was 6503.75, one tick variance, that's all. And it kept hitting that number again and again and again, and rally and fail, and rally and fail, and rally and fail. Eventually, it overcame all of that, closed above its open, and was stopped at the overhead Danielcode resistance, which was at 6644.50, which is a 5 ticks variance. Now, go back to the original lessons when you learned about Danielcode. We said that target recognition is valid on a bar high low or the close, and we require it to be within 0.1% of the target, not 1%, 0.1. In other words, 1/10 of 1%. Well, when I made that discovery, these markets were trading at just partial rates compared to where they are now. I remember back when I started discovering the Danielcode, I think the S&P was trading around 3,000 or something like that, maybe less. And look at it now. It's up at 6,000, heading north, and a real possibility with the enthusiasm in the market for all of the amazing things that are happening with technology, and in particular the Mag-7, the Magnificent Seven, the big chip companies and their users. But interestingly enough, 1%, 0.1% of 6,600, well, 10% is 664, 1% is 64, 1/10 of 1% is 6.4, or 6 points, and a bit less than 2 ticks, 10 ticks, of course. Excuse me. S&P 4 ticks to the point, each tick worth $12.50, $50 per point. So you can see from these high and low of this particular bar, it was so extraordinary. It raises this spectre of manipulation, which has been around forever, and it's essentially circled on what we call the PPT, the Plunge Protection Team, which is, it's all very secretive. It's reputed to be a branch of the US Treasury, and its job is to keep markets up, to make sure they don't go down too far, and that becomes a greater imperative when elections are coming at you, and generally accepted as a sign of the very good financial health of the US. But this was a day where it was roaring out, it was screaming. The Plunge Protection Team were in action. And what a good job they've done, because it's held it through that period of a bit of a consolidation, and it's breaking out again now. Good work, guys. So this is the S&P 6-day chart. I just want to remind you all that we're not that far off our all-time highs. You can see that 7,034 blue line Danielcode target up there, and we're not far from that at all. We're at around about 6,600, 6,700. Not far off the highs, all-time highs at that. And you'll see the same thing applying in the other equities, NASDAQ, Russell, Dow in particular. All of them are very, very bullish markets, still huge, massive amounts of buying being released periodically. So the story of the ceasefire in the hopeful ceasefire in Iran is about lists, and the list and the tyranny of lists has its moments, and it's been obvious for some time that the United States, Trump in particular, has become, I think, dismayed by the length of time and the cost of what's going on in the Iran war and the resources being used. And he's been looking for a way out. It's time for him. He's got bored with it, I guess. He wants to think of something else. And he's made a 15-point list as the basis for the ceasefire negotiations. Well, this is something he did with success in getting a settlement in Gaza. Although the list was great, not a whole lot of it's been affected. And Iran then, this is all very recent, matter of days, rejected the US demands, made its own a 10-point list of its demands. And both those lists were published and disseminated exhaustively. The Wall Street Journal has published all that material, as has Zero Hedge and other websites, etc. But apart from both lists being in the English language, at least the published version to us, they bear practically nothing that comprises common ground. And when you read them and then you see Trump say Iran's 10-point list is a good basis for a 14-day ceasefire and negotiations, and saying that Iran's requirements in the 10-day, what we thought was the 10-day list, are reasonable and largely agreed to. It's mind-boggling because they're directly opposed. The major issues, which are nuclear access to nuclear material, which Iran has been processing for decades, have now got over 50,000 individual centrifuges which process the uranium, turn it into material suitable for weapons grade, and Iran in their list says we've got to be permitted to continue our research and development with nuclear products, and America saying no way, totally opposed. Same with the Straits of Hormuz. Iran is demanding control, as they presently have, of the Straits of Hormuz. They're planning on making it a profit center and charging $2 million plus per ship, per load, for the tankers at least. And of course, that means that they're controlling the access, the maritime access to all of those other Arab countries of the other persuasion, Sunnis rather than Shiites. And they've got countries like Saudi Arabia and Kuwait, etc., at their whim, at their leisure. And that's not going to please anyone, I can assure you. So they're the sort of issues coming out now. And when commentators start to point out how far apart these two documents were, Trump discovered yet another different 10-point list. It wasn't that 10-point list he quotingly approved of. It was another 10-point list, but apparently no one but him was aware of it. So it's all proceeding in a rather haphazard method. So here we are. These are just the headings of the list of Iran's 10-point list. You can see the normal ones you'd expect there. And termination of all IAEA, that's the atomic authority, that is code for permission to continue manufacturing, processing rather, their uranium into near weapons grade material, which of course allows them at any stage to make a rush to finish up with a nuclear weapon, which is a red line for America and most of the rest of the world. So volatility is king in these markets at the moment. You can see this is crude oil. That's not really the brand of oil we're talking about coming through the Straits of Hormuz. This particular contract is light sweet crude, comes from America mainly. But you can see the effect of it all with very much raised and extended prices, and the local version of the oil produced in that region is even more inflamed, agitated, enhanced. Here's the S&P daily. You can see that little consolidation after that amazing day before Easter. A little inside bar, that was actually Easter Friday. It's supposed to be no trading, but in the infinite knowledge of the CME, they allow electronic trading until about 10 o'clock in the morning of the holiday, which doesn't make a mess of the charts in my view. So they had that 3-day, 4-day consolidation, and then whoosho, this is what happened the minute that the ceasefire was announced. Trump has been pushing for a ceasefire for a week at least, fervently, fiercely, roping in everyone that could be roped to push for a ceasefire, which sort of somewhat smacks of desperation by Trump, which is understandable considering the gravity of the situation. This is the Russell, same thing. That little consolidation, one push out from the lows, and the build up, the number of bars in that low really had you wondering what we were going to see when it broke. And it did break, and then nothing happened. It rallied and went to its first correction, and in jumped the PPT or the Trump put or the magic of the Danielcode ratios, whatever you prefer. And up she went. Huge, huge, huge and important volatility for you all there. NASDAQ, exactly the same thing, same pattern for all of it. They're just the dailies. This is UST bonds. I'm going to just touch on a couple more things about that as we go along, because it's extraordinary how calm the bond vigilantes have been. We haven't seen or heard of them for a long time. This is gold, and of course, extraordinary, the rise and rise and rise and rise in gold. And this has still got a note from our short sale from the highs, or soon after the highs. We had, of course, a Danielcode TO3 and success sell signal. Down she went and made 75,000 odd per one contract. That's what you call volatility, isn't it? Very exciting stuff, and making a nice little rally up at the moment. This is soybeans, which has been a sore point for US farmers because China's largely switched its soybean buying from the United States to Brazil, and it hasn't been a happy experience for the US farmers. And there's all sorts of hopes that Trump would be able to talk China back into buying that same historical levels of beans, but we had a relief rally where it looked like part of it was happening. You can see what's happened after that. It's dropped way back. It's just been sitting in a range, no inertia at all for 2 or 3 weeks now. Very disappointing for American farmers. Teach yourself to trade, folks. This is our relatively new video series, which I've developed to make it a alternate way for you to learn how to trade. Of course, we still have our traditional one-on-one tutorials with me that take 5 or 6, 7 days to use it. With the video series, the videos are all reasonably short, around 90 minutes, most of them, and you can do it in your own time, at your own pace, and of course, importantly, it's at a much lower price point, and that has been very attractive to our clients, and they've done very well with it. I'm showing you a couple of the Forex markets here. This is the Aussie, the Australian US dollar pair. Nice rally recently here, and supported right across the board. This is the euro, same thing, almost exactly the same pattern. And here is the British pound US dollar pair called cable. And it's been the strongest of all of them, which sort of made me start thinking, were we seeing a systemic weakening in the US dollar? But apparently not. You'll see that as we move along. This is the S&P index, folks. It's got a great big gap on its jump up to yesterday's trading to Wednesday night's trading. How clever are these markets? I mean, this index was closed. It works office hours, 10 to 4 RTH. Yet in that great big gap, look where it goes to. That's the Danielcode last resistance, the famous Danielcode black line on the first big retracement from the low up to the second of the significant little swing highs in there. How clever it does this without physical trading happening. Is it matching the futures? Well, it looks like it, doesn't it? That'd be the answer. So, UST bonds. This is a matter that should be of great concern to you. This is a chart I've been showing you for years and years. It actually starts from 2000. And you can see that it's just now fighting to hold that support on that dotted diagonal line, which is rather clever because that's 6 Danielcode deviations from the mean. And we stopped plotting the mean in November 2016. These markets have just been running on those numbers, those forward numbers, for 10 years now. Quite amazing. You can see the thick red line, diagonal red line going from left to right and low to high. That's the mean, and the dotted lines are Danielcode deviations from the mean. They're not normal standard deviations, which are 1. They're a multiple of that being the Danielcode targets. And it's been quite extraordinary, this chart, and we've been tracking it all the way down. And now it's just broken through that last support, and it's clinging to it quite literally. Bears watching closely, folks. There could be some trouble in store there. This is the US dollar index, and I've shown you this chart before. For the last, this is a very long-term chart. Each one of these bars is 24 trading days. So this is the Danielcode equivalent of a monthly chart, if you like. And you can see for the last 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 months effect. It's just been vacillating between support at $85.70 odd and this line, which is actually one of our famous fifth seal lines, which has been the overhead resistance. And the market's just holding to that range, which is showing that it's actually sitting at about 50% of the major range, which is way back before the start of that chart. Here's the Russell long-term chart. This is very long-term. Each one of these bars is 59 trading days. And I wanted to show you this just to remind you of how close these equity markets really are to their all-time highs, which happened in January. We're not far off, folks. And here is a slightly cleaner version of the UST bonds, very long-term chart. That's similar to the one I just showed you. In this case, each bar is 59 trading days. Same thing, you can see how the median, the extensions of the median 6 Danielcode deviations is providing this ultimate and very important support in UST bonds. Here we are, the things you don't talk about and don't think about much, but they're real. This is the US federal budget deficit, the projections, the actual and the projections. And that should scare the hell out of you. And I guess Trump is probably not the man to rein in spending, given his history and particular, what was the word? Personality, I guess. So this is the US federal debt. It's actually quite extraordinary. It's now exceeding 39 trillion, representing more than 124% of GDP. And the way that the federal debt is calculated is very strange. It's not entirely honest. As a statistician, I would tell you that. So it's actually even worse than that. And that's scary. And the most important thing to look at there is the trajectory. It's just going up, 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 up. And no political awareness or courage to deal with this problem. And perhaps it's just too hard for a politician. And that seems to be the case. And it's not just the United States, folks. It's all countries have got this same problem. In Australia. So this is the federal funds rate against the 10-year Treasury yield. And the 10-year Treasury yield is probably the most important chart in the world. And the rising 10-year Treasury yield signals trouble for the US dollar because it indicates that investors are selling off bonds, which increases the US government's borrowing costs. And the US government's borrowing is a story all on its own, and it's as scary as hell. Anyway, Australia as a nation is not one to be throwing stones at anyone. It's equally appalling. So I hope you've been focused a little bit on the market's perinations here, folks, and what you can look forward to in the next couple of weeks. It's going to be very dynamic. It's very, very volatile, and great opportunity for traders. If you haven't already, please take a free trial at the Danielcode website, www.thedanielcode.com. Just hit the register button. If you have any issues, contact Terry at support@thedanielcode.com, and he will be happy to assist you. And finally, this is our disclaimer. Trading of derivatives, futures, forex, etc., is risky. And if you don't know what you're doing, you can lose your money very quickly. I really urge you to not trade with real money in any form until you are able to satisfy yourself that you are a safe and competent trader. And if you're not already, I will be happy to teach you to be the best of safe and profitable traders. So thank you for bearing with me, folks. We're a good half hour over time today, which is unusual. We had a bit of catching up to do, so I hope you bear with me, and I trust you enjoy this webinar. Bye-bye for now.